morning, Mark Soderberg with ADM Investor Services with your morning ag market outlook for Tuesday, February the 25th. Well, mostly lower trade across the ag space here in the overnight session. The outlier really being the bean oil, which is currently up 20 to 25 points. Corn right now down another 3 to 4 cents. Soybeans, they've rallied back to near unchanged. It's called steady to about a penny lower. Bean meal is steady to about $1 lower, while wheat prices are off between only 2 to 3 cents in Minneapolis, 6 to 7 in Chicago, and Kansas City's down a couple cents as well. Widespread rains across key growing areas of Argentina this week, along with speculative selling ahead of the USDA Outlook Forum and First Notice Day against the March contract later this week, continue to weigh on commodity valuations, and talk of tariffs going on with Mexico and Canada in early March, also contributing to the bearish sentiment. Speculative traders yesterday were sellers across the ag space, led by corn, where we had them selling just over 10,000 contracts. This reduced their long position, however, still quite hefty at 330,000 contracts. Open interest did fall 22,000 contracts, but the March alone was down nearly 47. So elsewhere, we had speculative traders selling between 3,000 and 5,000 contracts. In Brazil, considerable progress has been made in recent weeks in harvesting their soybean crop and the planting of their second corn crop. According to AgriWell, nationwide bean harvest has reached 38% as of last Thursday. That is now slightly ahead of the normal pace. In Mato Grosso, their biggest producing state, 2/3 of the crop has been gathered. That matches their historical average. Corn plantings, they've reached 64%. It's still below the 73% from this pace a year ago, however, much closer to the historical norm. Weather this week will be mostly wet across the north, dry across the south. Most soybean production forecasts in Brazil are starting to trend a little bit lower here in recent weeks, and this largely due to dryness in the south. Many are closing in on the USDA level. They're at 169 million metric tons. Well, I think earlier this month and late in January, many were suggesting production could reach 175 million metric tons or higher. Big rains across central Argentina this week could actually produce some localized flooding concern. Some rains may stretch up into the northern growing regions of the country. However, they will likely remain in a drier than normal pattern. In the U.S., we've had much above normal temperature spread across much of the nation's midsection. Many upper 70s, even low 80s being reported across some of the southern plains. Rains this week to favor the eastern corn belt with much above normal precip looks to be widespread over the U.S. midsection the first week of March. Egg production in the month of January at 8.865 billion was a 9-year low for the month, and that was down 4% from a year ago, and down nearly 3% from December alone. So the number of layer birds that has fallen to only 363 million. That's down 4% from a year ago, triggering a rise in egg prices to all-time highs really for the past several weeks. May corn has traded to its lowest level since the first trading day of February, as speculative traders continue to pare back on their huge long position, while the trade also braces for corn acres for the 2025 growing season to show about a 2.5 to 4 million acre increase over a year ago. Support for March corn does come in at 484. May beans holding just above this month's low at 1041, new 2-month low for meal, and bean oil is featuring an inside trade. May Chicago wheat is challenging its 100-day moving average at 581 and a quarter. Kansas City is holding just above $6. We did see a slight increase in crop ratings in Texas, lower in Oklahoma, where conditions are mixed due to recent cold temperatures. Thanks for listening, everyone. Have a great day.